Hello everyone, my name is Chris Titley and welcome to the FinTech Australia podcast. The FinTech Australia podcast takes listeners on a deep dive across the FinTech industry in Australia, focusing on the challenges, opportunities and big stories our community faces. Let's get to today's episode. Hi, it's Chris Titley here, and as part of the FinTech Australia podcast, we're joined by Lisa Wade, CEO of DigitalX, for your first FinTech Australia podcast. Lisa, welcome.
Thank you. Nice to be here.
Thank you. Now, we're going to talk all things cryptocurrency and the likes, to give people and listeners a bit of an update of what's happening. But firstly, what we'll do is I'd like to hear a little bit about you, Lisa, and your background and what got you involved into this particular sector and DigitalX.
Oh, wow. Okay. So my background is in what in crypto world we call TradFi, and my career in finance started about 30 years ago. So I started off at Citigroup trading index arb and program trading, and then did that for about 9 years in various roles, and then went and managed an internal hedge fund for the Smorgans family, and then started a couple of funds of my own and landed myself, they were sustainable finance funds, and landed myself at Bendigo Bank building innovative investment structures for what was to be community super. And through that, we started building some really cool things like solar for schools and microgrid models. And it was right about the time when Bitcoin was rising to prevalence. And a few of my old trader mates were trading Bitcoin up in Byron, as you do. And whilst we were building the microgrid models, it became really obvious that we needed some really good funding mechanisms. And it was a fortuitous meeting with Macquarie Bank and American Express when they told me that Bitcoin was infinitely divisible, and I realised the power it could have to change payment structures and financial models, particularly in my passion for impact investing. So I never really looked back from there, and I just began building financial structures using these new technologies, which landed me as CEO of DigitalX. And DigitalX is what we call a tech fin. So it's a finance company operating at the intersection of technology and finance. How that's different to a FinTech is we actually use technology to recalibrate and reimagine, or Imagineering as we call it at DigitalX, financial structures and ways of financing and ways of investing and ways of building new investment tools. We use technology to do that. And DigitalX has two really great businesses. We've built a product called Drawbridge, which is a RegTech product, which sits on the ASX Symphony platform. To sort of bring that to life, we acquired a business called Sell My Shares. So we do have a TradFi element, which gives us our passion for what we call bridging from Web 2 to Web 3 investment, which I'm happy to unpack that jargon a little bit later. And the other side of the business is we run a crypto fund, two funds actually, which at the moment is a top 20 crypto fund, crypto opportunities fund, and a Bitcoin fund just for accessibility. And both of those are for wholesale investors, I will qualify. Now, DigitalX itself is a listed company, and we are quite globally unique in that we hold Bitcoin on our balance sheet. So I think on a retail level, that's probably the access to us. A lot of people do buy our shares to get exposure to, it's sort of like a hedged exposure to Bitcoin, because we do have the TradFi business and the strategy around building from Web 2 to Web 3.
So much to unpack there, Lisa, but I'll just delve into the points that that interest me. When you mentioned Bitcoin and you're talking to Macquarie and Amex at the time, or representatives from those businesses, and you saw the sort of the light switch came on, what was the light switch there? And can you talk me through that kind of moment? You're like, hold on a second, there could be something really here.
Oh, yeah. Well, because I had done some research on Bitcoin, because I could see the genius behind the cryptography and creating this sort of stateless cash without all the problems of central bank currencies and, localized issues. And I spend a lot of time in Kenya, and I really saw the democratization opportunity. But what troubled me was in the white paper, there's only 21 million Bitcoin ever to be issued, but no one had ever talked to me about fractionalization.
Yeah.
And so that was a huge...
buying one Bitcoin versus buying X% of
one
Bitcoin.
millionth,
Yep.
yeah. And as soon as, I think it was the guy from Amex just said, and almost like rolled his eyes at me, I was like, oh my God. And it was only in 2011. So to be fair on me, it was still pretty early.
Yep.
And once I realized that, this concept of fractionalization actually opened up this whole new world of finance, because what it does is there are so many investment opportunities that we can't offer to mums and dads in the street. And again, I say we're a wholesale fund. Yep. However, at Bendigo Bank, obviously, we had a different client base. And just the concept of being able to unlock all these investment opportunities for mums and dads, and then consider the portfolio opportunities of constructing portfolios with this fractionalization concept, it just opened up this whole new world for me. And I really couldn't look back, because, infinitely divisible then leads to this concept of fractionalization. And then you start, back then it wasn't really buzzword bingo, using the word democratization was quite a new concept. Yep. And something that's become quite popular in sustainable and impact investing. But, it really was just that. I mean, I think, the common term is aha moment, which sounds a little bit cliche, but I've since found out that aha is translated as the river of life. And that's what happens.
There you go. On the other side of the ledger over here, when I do some storytelling, that was the word that I used in 2015, and people are like, do you write children's books? Certainly some buzzwords go through different phases. Now, when we talk about cryptocurrency, and you specifically Bitcoin, we're not going to get into the intricacies of price movement, etc., but there has been headlines, there has been wild swings, I suppose, or increased volatility against I would call mainstream assets. Can you talk about that, the popularity, and maybe some recent news which has sort of, put a little bit of a dampener, I suppose, on what's going on with cryptocurrency per se?
Yeah, well, look, I mean, in my heart, you've heard my background. I am a trader at heart, and let's face it, the implied volatility of Bitcoin is about 78% on any given day, and can be a lot higher. And, from a trader's point of view, that's awesome, because you can trade around a lot and it's extremely volatile, and that's what traders love. As an investable asset, that's almost an eye-bleeding scenario. Yeah. And it's not for the faint-hearted. So, these markets are nascent. Crypto is a new concept. And with nascent markets, one of the inherent characteristics is volatility. And we certainly see that. What we're experiencing at the moment is like what people are calling the mainstream moment, which is institutional interest. And we're starting to see this real interest and fascination from the press, and that comes with pros and cons. Yep. And when we talk about like the mainstream moment, really, from my point of view, I'm fascinated in the recent market sell-off. And almost to convince myself, because obviously it's really hard mentally running investment opportunities in such volatile markets. I mean, the down moves we've had in crypto I was running a long only responsible investment portfolio during the GFC, and that is nothing compared to what we experience in these markets running a long only fund. And almost to convince myself, I started with the team what we call the shift list, which was just a nickname. I was like, let's really pay attention to what is happening with institutions and keep a list of all of the critical moments that are happening of investment from large institutions in terms of building infrastructure or strategic movements. And honestly, we have one of those nearly every single day of large institutions either investing in the space, making a move. Last week Fidelity opened free trading for Bitcoin. That's been sort of coming for a long time. Everybody's watching trademarks because people are, I think Citigroup, JP Morgan registered digital wallets.
Or domain names or something like that, yeah.
Yeah, that's right. There is just so much going on, and this shift list has become a fascination because and I break it down into sort of a couple of different categories, because there's looking at our sector as a medium of exchange, which I would say Bitcoin, looking at Bitcoin as a currency for countries where it's never going to happen in Australia. We have such a great financial system. I mean, never say never, but highly unlikely that Bitcoin will be a medium of exchange endorsed by the Australian government. However, there are countries in the world that don't have stable currencies. They have huge problems with reserve currencies, and there are governments in the world starting to adopt Bitcoin as a medium of exchange, and that could, move into mainstream crypto like ETH and, maybe a few of the others, Ripple, if they ever get through their court cases. There's a few, probably about 4 that could be in that list. And then you've got there's medium of exchange, and then you've just got this infrastructure play, which is building all of the financial rails that go with these new crypto assets as real financial investment opportunities, and building the infrastructure and the rails around that. So, and there's a lot of work. I've only been at DigitalX since February. I came from National Australia Bank, and honestly, I don't think you could ask me the name of one global bank that isn't doing work in this space. And that is, coming with the good and coming with the bad. With the good, obviously, the new media focus, and then obviously, there is some bad behaviour inherent in the nascent markets because they're not regulated, and that is, in danger of unravelling a lot of the good work that's being done, because it is perceived to be, it's tarnishing the industry. And what I would say to that is that it's individuals that are, or groups of individuals that are creating these, frauds, or however you want to describe it. I don't like ever accusing anybody of a crime unless they've actually been put in jail. So whatever you want to call what's happening, you can't deny the contagion, you can't deny the market impact. And that has led to even further volatility and even further uncertainty. And we're still right in the middle of that, quite frankly.
Two points that I'd like to bring up, and you mentioned one of the words, regulation. The other one is utility value. A lot of people say, oh, well, there's no point in Bitcoin per se. The skeptics, or I don't know, in terms of like, are you going to buy a cup of coffee with your Bitcoin, etc., and whatnot. I suppose that intertwines with regulation. I'd like to get your views on when someone says Bitcoin and someone says government. You're like, oh, well, it sort of couldn't be too further apart. But it seems like some governments and some, obviously, institutions that you're talking about are actually getting closer to it.
Oh, look, I mean, like back in the day, we would just talk about first principles, and the first principles of money is medium of exchange. That's a tongue twister, store of value, and access to credit. And Bitcoin is achieving all 3 of those things. And at the end of the day, I just came to the conclusion that money is a false human construct, that if you're willing to take from me and give me a good or a service in return, then money is anything. And there's even an article by David Birch, which is called The End of Money, that talks about real world asset tokenization and just this ubiquitous fungibility of assets for value that is just interchanged.
Sort of blows your mind, but it's certainly on the futuristic, but at the same point in time, there's probably a pathway to it.
Oh man, well, 16 years ago when we started responsible investment, we were called futurists then too. So, we might be within 10 years away from that happening. None of us know. No. Yeah. I find it quite exciting to think about, because the potential for that is enormous in terms of the costs that are embedded in the layers of financial markets and finance for the average citizen. And, if you think about just simple things like foreign exchange when you go on holidays, I mean, have you ever been on holidays and had to change money and not felt completely violated? I mean, no, I haven't.
No.
Open-ended question there, but if I mean, there are, FinTech.
Well, there's no fees, but the spread's at 150,000 basis points, so...
You can drive a truck through them, right? There could be better ways of doing things, and I do believe that this technology is a path to that.
In a couple of questions, opportunity and threats to cryptocurrency and Bitcoin. I mean, this sort of moment that you're talking about that we're still experiencing in regards to potential actors that have brought things down or brought the industry down for a bit. What's an opportunity to come out of this?
Well, look, I believe very passionately that this is the transition to Web3 financial rails, and that is all financial transactions happening inside of stablecoins and CBDCs. I believe that that's the greatest economic opportunity of our generation, including the other side of that, which is the transactional side.
Yep.
The real opportunities we're looking at right now are real-world asset tokenization. Consider there's $256 trillion of real-world assets that could be tokenized. Then if you break that down to how is that going to be possible, there are data plays like decentralized data validation, because you have to validate those assets. You can break it right down to the picks and shovels. Then there is just so much data. So then we have to learn how to sutrify that data, but still be able to verify that that asset is there. And there's some really cool terms called ZK rollups and ZK snarks and a whole lot of things you could do research on there, because they are...
Actually, you've just created a title for this podcast, by the way. You have to tell me the correct spelling, but I think it'll grab some headlines because I don't know what that is and it sounds pretty funky.
Yeah, well, Vitalik Buterin is the king of it all. So just go to his blog, and then you've just got all of the opportunities around NFTs, and there's some really cool things happening. My FinTech hero Brett King, he's working on some things. We're working on this validation, like these non-fungible NFTs, non-fungible tokens, to validate environmental data. And when you start thinking about identity in different ways, there's huge opportunities around that. And then doing that for corporates, and that plays into what we're doing with Drawbridge. And to me, there's just so much to look at, and I find it fun. I don't know if you've ever heard of hypertext. It's a form of novel writing where you click on links.
I remember teletext. That was on the TV when I was growing up.
But it just takes you on this adventure. As an investor, I'm fascinated by, I read one article on ZK snarks, and then I end up learning about something completely different, and concepts that it takes a little while to bake in, but I do see it as a massive opportunity. And at the same time, oh my God, it is so risky.
Yes.
Portfolio construction, methodology, and risk return, and the capital asset pricing model. Arguably, it could change. However, it will never go out of fashion to manage risk, and nobody should ever be investing more than what they can afford to lose. And it breaks my heart watching people and hearing people losing money at all, but losing more than they have to lose. It is still investing 101. It is absolutely, it's like trading, emerging market stocks. It's just hugely volatile. It's, risk reward. The returns that you see are eye bleeding because the risk is eye bleeding. Yep.
No, that's some very, very sound thoughts there, Lisa. Just one question on Web 2 and Web 3 to sort of wrap things up. They've got there's a lot of Web 2 companies that people say are sort of, dinosaurs or something along those lines. But, think of Alphabet, for instance. I mean, there's a lot of data there when it comes to people's houses and where things are, and Google Maps and Apple, etc. I mean, are they interested? I mean, obviously, Meta is, but are these companies going to be a critical part of Web 2 to Web 3, or is it sort of let's skip them and go straight to it?
Yeah, I believe so. So Web 5, which is sort of the buzzword right now, is Web 2.
What happened to Web 4, by the way?
It doesn't exist.
Right, okay, there you go.
Or has been left out in the cold. And really that's talking about this concept of the combination of Web 2 and Web 3.
Oh, right, the mathematics behind it.
Yeah, and the way it's described, I read, which I really love, is Web 1, we just used to, send messages and text each other. Web 2, we built financial rails with credit cards and the existing banking system and made financial transactions. The metaphor to that is shopping from your couch alone with your credit card. Then Web 3 is shopping in the metaverse with your friends, paying with your crypto wallet, and those transactions happen atomically. However, you're still giving your wallet details over. And then if you combine the two and start the conversation we're having around your personal data and ZK rollups and those validation, that's where the rubber really hits the road. Is I can own my own data identity, and instead of me going into someone's store in the metaverse, I can actually have my own metaverse and invite people in. Therefore, I own my own data, and it's validated with these ZK snarks or rollups. And Vitalik Buterin calls it soul tokens, which I think is amazing, but there's all different variations of that. Talking about that and that journey will require all of us. And, I believe that all of the Web2 companies, you look, Google, Meta, they're all doing it. They're all part of this journey. They're all investing.
Square,
they all see it.
Which is now Block. Yep,
that's right. So, it's happening. And, I can't think of too many banks or financial institutions or Web2 companies that aren't awake to it. They might resist it like oil companies resisted solar.
Yep.
But I think you'll find 25 years later, oil companies are the largest investors in solar.
Yep. No, on that note, Lisa, I think that's, exactly. No, I'm with you on that indeed. So on that note, we'll leave it there. Thank you for the informative session on what is happening in cryptocurrencies, Web 2, Web 3, not Web 4, but Web 5, amongst many things, the ins and outs of what's happening in the current market, which is what we're experiencing right now. So it's actually great to timestamp this being early November 2022, just after some major headlines that are dominating the press at the moment. I wish you all the best, Lisa, in terms of DigitalX and your progress forward with the funds and also the systems that you built, and really look forward to catching up.
Thank you very much, and thanks for your time. See ya.
Thanks for listening to the FinTech Australia podcast. I'm your host, Chris Titley. The FinTech Australia podcast is a collaboration between FinTech Australia and Sub11. For more information about membership options, news and the events coming up, jump on to the FinTech Australia website. Have a great day. Thanks for listening, and we'll catch you next time.